Hello, today is Sunday. It is early in the morning and want to get this out because I know it's headed into a historically volatile period with the inauguration coming up on the 20th. And we're headed into earnings season. So Friday basically kicked off, Thursday and Friday kicked off earnings season. It's not horrible numbers for the banks, but they're definitely getting hit. But you have to understand, this is off the cuff here, but I'm still going to show it. Even a JP Morgan, and I even put this on social media, like a JP Morgan, like nothing wrong with this company, and long term it'll be fine. But do I want to buy a bank stock, JP Morgan, when the RSI was at 82 headed into earnings? No, I will never buy that. That's not an earnings trade for me. This has gone up from 112, more than that, from let's just call it 102 to 145, 142 in a couple months. So no, I don't want to buy that into earnings. Earnings were completely fine. And people were like, but the earnings were good. Why is it not going higher? Because it ran into earnings. You don't buy that into earnings. The risk reward is not good. Does that mean it's not a buyable event now? It's a better opportunity now, but I still think it could go a little bit lower. Earnings season, just historically not a good time. So there's my little rant. Like, if something has rallied hard into earnings, don't be surprised if it consolidates even after a good report. This is Trading 101. Okay? So here's the week. We were overbought. Like, we've been talking about this, and we see a little bit of a hiccup, which historically mid-January to February is a weaker period when we have a new president. That is historical, and I'll show it to you. After the last recession, which this is basically comparing, I know I keep showing this, but it's interesting. It's hard to ignore. Is 2009, 2010 same as the 2021? This is almost identical following the moves. It's, again, history doesn't always repeat itself, but it often rhymes. So we're getting right here. There was an 8% decline, which would be unfortunate. Again, I do think that this is a period where if we can work through this will lead to good things. Again, if you didn't look at your account from right now, I think many accounts will be 10% higher. But it's going to probably come with some of this, up and down. Okay, so you have to expect that. That's how the market works. It does not go up every day. I can't prevent every dip. I try to. I mean, we have done a good job this week in selling winners like Ally. These aren't names that I necessarily want to hold, but they're in trend. So when this got to 141, this was a sell for me. That is crazy overbought. This is a great trend, and on pullbacks, I'll buy it again. But I can't hold it. You can hold it, but that's not part of my trading philosophy. We also did the same thing in SE. So I'm showing you this to show you we have been taking gains into this. I believe we got out at 233. So it's taken a little bit of a dive. This is a great name, and I'll buy it on dips every time. But this is not great risk reward. Almost every time we get to this level, we see a little bit of a dip. It's just risk reward. There's nothing fancy here. Also, big lots we did sell, which again, you're seeing I'm making disciplined moves and not just being in growth tech. You have to find some unique names to win, in my opinion, this year. And it doesn't mean I don't buy this again soon. It's just a little bit overbought. I took some gains and probably will get right back into this name soon. So performance for the week, you can see the Russell 2000, which is nuts. The Russell 2000 the past 2 days hasn't really been that pretty. But look, if you think this is for the week, the intraday 1.49%. Know after the bell that many of these indices were much lower. So what you're seeing here, don't be surprised if you're a little bit shell shocked potentially Monday, because there was a nice dip after the market closed. So even after this decline of, let's call it 3%, we aren't even to the 10-day moving average. That's how stretched we were. Now, it doesn't mean that it doesn't go higher. It can remain in overbought territory, but it's a risk-reward game. I don't want to be taking risk here. So clients, in short, you should hope the market goes down, because I, in some cases, have 60% in cash. In some cases, have 30% in cash in clients' accounts. I know it's not ideal to see down periods, and I have no problem selling more if we don't hold key levels, and that's what I'm going to show you today. Again, this is what I've been watching. It doesn't mean it's going to follow it to a T, but this would be interesting if this were to happen. If this happens, it would be very unfortunate. However, this will lead to good things and will allow me to add at much better pricing. This is how you create alpha. Okay, so I see what you're seeing in the news. The same analysts that were 3 days ago saying, oh, this is going to be a great year, are now saying, oh, this could really turn into an ugly period. There's nothing like price to change sentiment. Helene Meisler says this all the time. It's psychological. You see red and think red. You see green and think green. I'm on a little bit tangent mode here, so just laugh it off. I know I keep saying the same things, but I keep getting the same calls. Have you seen the inauguration? People are afraid of a 10% dip. That very well could happen. But we're in a good position. And if you're worried about it and have cash sitting on the sidelines, which I know most of you do, at your couch stuffers, make sure you're adding. Help a brother out here. That's how we do well together. So there's my little tangent. Also, as you can see, next week, Monday is off, obviously, but we do see earnings piling up. And usually there's a little bit of not complacency, but a little bit of consolidation during these periods after a nice run. Would not surprise me. So let's get into the charts. No more tangents. But I hope that this helps. I do think it's going to be a great year, but every year sees on average sees 3 5% dips. I'm not going to be able to time them perfectly. I'm very good at timing tops. I need to get better at timing bottoms. I'm not going to perfectly time anything, but we need to be adding on this dip. I'm just telling you right now, I will be adding on this dip. Even if Monday goes down significantly, I'll probably add. Okay. Right now, we are holding key levels. Okay. The 8-day, which is the blue line, has not even close to crossing the gold line. Now, the price action right now where we close is really close to the 20-day moving average, which is a warning sign. But listen, we've been saying, listen, guys, RSI near 70, not great things usually happen. So don't add here. Now, we're in a much better opportunity to say, okay, this isn't a bad risk reward level. It's at least much better. Do I think we go lower? Probably. Okay. So I hope it goes lower. I know you don't like to see your account go lower, but that is why I add tons of cash when we're overbought and buy on the dips and rinse and repeat. Okay. Let's go to the next chart. This is really support and resistance. Mainly, why is that not working? There we go. Sorry about that. Different levels that I'm watching. We're at one right now. We tested this intraday after the bell closed. We are basically right at the 20-day moving average. Okay, so if I zoom out, if I go back to here, this is why I'm not selling too much, because what if this is a fake out? Usually in this run, the 20-day moving average, near the 20-day moving average, has held. So could we see, if you notice, we have gone below here before, but it quickly jumps back up. So headed into a 3-day weekend, I did not feel like taking more off since I have about the least case 25% in cash and some of your accounts 60%. Okay. So I want to make sure you understand, like, we're in a good position, but if you have cash, like I said on social media, on Wednesday, before we even saw any dip whatsoever, I said add to your accounts so we can buy these dips. Okay. So I do that for a reason. I basically am saying we're near a top short term. I do think we're much higher than this by the end of the year. So the levels I'm watching, 37.50, we basically closed very near there. The range between 37.10 and 37.20, 36.90, and these are starting to be pretty decent dips, okay? So if it does not hold the 37.10, I think it does get ugly from there, and I will definitely back off risk. But we have a decent amount of cash, so it might be something where I actually add because, again, the trend is up, period. This is a bull market. It doesn't mean you don't see a 5, 10, 12% dip during that period. That usually happens every year, okay? So be disciplined. The market does not go up every day, okay? So the put-call ratio we've been watching, this is usually not... This means the market is very complacent. Doesn't mean it can't stay there. Even after the past 2 days, we're still at the 45 range, which is still pretty complacent. I would like to see this get out of this range. So there's a lot of complacency. This, again, wasn't good risk reward to add, which is why I didn't. I actually backed off risk. This is just to show you it's not uncommon to see dips like this. I mean, this is a 14% dip, 10% dip in the NASDAQ 100. We're barely holding the 20-day moving average, but it's at a level that could definitely pop back up. So I got to be careful here and not selling too much because this could very well turn around quickly. If it doesn't, I think we very well could see some real consolidation that we haven't seen in a bit. So again, we'll work through this, but it's going through a period, and I'm going to be real with you, probably going through a little bit of a period where it's not going to be so fun. The 10-year, which I basically show the last few weeks, the 10-year Treasury yield got overbought. Okay, this does not surprise me. We talked about this. Like, listen, don't be surprised if yields go down, and this might be a detriment to banks. I've talked about this, okay, which is why I didn't buy them, because they were overbought. Percentage of stocks above the 200-day moving average, it's still high. This is very, very strong. You can't deny that. Again, I'm quite bullish, but short term does not surprise me to see this. This is normal consolidation, okay? Exposure is very high. That's not that's a little concerning, to be honest with you. That exposure is this high. Probably not a good thing, to be honest with you. McClellan index, not a bad thing. We saw this dip kind of going sideways here. So breadth, not horrible. Friday was not beautiful whatsoever, which is why, I've been talking about on Friday where I was like, hey, I actually said this Thursday, hey, let's see if we see a dip. We're going into OPEX. We're going into option expiration on Friday, bank earnings. Let's see if we get a dip and see if we rebound at 2 o'clock. Did not happen. So that's a change in character right there, that I did not buy, made the right decision. So to me, that could potentially mean we need to go a little bit lower. I'm just being real with you. And we're in a good spot with that. Be thankful we didn't add. It was very tempting to add even Friday. Okay. This just is a different perspective of the McClellan index. It's not really too noteworthy at this point. The trend between the Russell 2000 SPY and the S&P 500, we said once this broke out, don't be surprised. And boy, it surprised me how fast it moved, but it's unreal. So a little volatility would not surprise me. Hockey stick. Might need to go a little bit higher here. So we're working through this, okay? we're being real with you. We've sold some really good names. We want to get back into some names, but you also have to understand, like, the strength is not in these names, but soon I expect people to buy these names, okay? I mean, this is a big dip between, it's gone sideways since September. I mean, 304 at the end of August, now 244. That's a big move. I don't think that big tech is just going to get sold out of endlessly. Now, do I think it's the right time to buy? Probably not. I would wait a little bit, but if you're long term, you'll probably be fine in that trade. But if you're short term, it might be a little bit shaky, okay? But it's getting to a risk reward level. I mean, that's very tempting when it gets down this low. Holding the 200-day moving average, it's not in trend, but do you go a little dumpster diving? I mean, I don't want to call it Facebook a dumpster, but it's not in trend right now. I mean, the scooter rating is a 7. That's not pretty. So, yes, I'm looking at these names, even names like Facebook, the FANG names. It's hard to ignore. Even an Amazon that's consolidated basically since July. It's tempting. I mean, when these periods happen, the longer it consolidates, the more likely once it breaks out that it will happen. I do believe that, but we're not seeing any sign of change here. But usually right around here in the RSI, it gets interesting. Might need to go a little bit lower. So by no means am I saying Facebook and Amazon is a buy for me. It's interesting, like names like Deere, the agricultural names have really been the strength names. Like, this is a lot of strength in these names. We might have to pick some oddballs like a CVX. I'm not really into energy usually ever, but it's currently decently in trend. So maybe this needs to pull back a little bit more. Again, I don't think this is a year where you can just say, all right, let's get into big growth momentum names and you're going to do well. I think it will do fine long term, but you're probably going to get hit a little bit. Okay, so we need to find some oddball names, and we're constantly looking for those names. It's just going to take some time. So BlackRock did not report bad numbers whatsoever, but it checked back. Why? It just was overbought. So they reported, I believe it was either Thursday or Friday. I usually implement a 3-day rule to say, just give this some time. I think the risk reward here will be pretty good, to be honest with you, in time. So just kind of just trying to show you that there are opportunities. It's just, when do you buy? Right now, I'm not really seeing a lot of buying coming in. So I'm being cautious. But again, how do you get outperformance? You sell at overbought levels. You buy things in trend, which again, last year in trend was tech, period. Now we're really starting to see the rotation occur, but when everything goes down, when the market sells off, mostly everything goes down. There are some names that definitely are not going down, but there are opportunities. So don't get too bearish here, because there are opportunities, okay? So I think that's really all we wanted to get through. There's a lot of things going on in the world. We've had a heck of a run. So does it surprise you to see a little bit of a pullback? It doesn't surprise me at all. But the trend is still up. Even if we go 5% lower, which would be a shame, but if we go that much lower, I'm probably out Monday or Tuesday at that point. So watching closely. Really, you should be licking your chops, clients, because we have a lot in cash. So don't worry too much. I know a lot of people think that just because you have an account that it's all 100% invested. That's not the way I manage assets. Many do, and there's nothing wrong with that. You'll be fine long term, but I try to manage those dips to create alpha. That's how we manage. That's what I try to do for you, is to prevent those dips so we can add cash on when things are down, when things are ugly, buy the leaders there, and hope we get some outperformance. So thanks for your time. I know I'm a little bit in tangent mode, but getting a lot of calls where I have to continue to repeat, which is fine. It's the same thing that happens over and over in the news. Block out the news and watch price action. Right now, price action is a little shaky. Thankfully, we have a lot of cash and we're disciplined. Tuesday, Wednesday, I said every day we go up, I'm taking some off. We did that. So we're in a pretty good spot here. Do yourself a favor. If you want outperformance, add to your accounts. It's not a business proposition for me to make more money. Yes, I will. But that's how you outperform, is you add when things get ugly. That's textbook. Buy when things are low. And I will pick the leaders for you. So thank you so much for your trust. I do expect January and February to be a little bit shaky. But it's one of those, like I'm saying in my commentary, it's one of those years that if you can handle a little bit of a dip here, it'll probably be a really, really good year again. Unemployment is very, very high, and you're like, wait, that's not a good thing. For the market, it is, because numbers usually improve from there. Market usually continues to add money. The Fed is still pumping money. I mean, the backdrop is good. Does not mean we don't see dips, okay? So thanks again for your trust. There are opportunities. I'm licking my chops even after a 3% dip in the market. So there are plenty of names that are down a lot, and that's why I was showing you, like, look, Facebook is down significantly. Doesn't mean it's a buy, but I'm just showing you big names that are down a lot already. Okay, so we keep getting these rotations. What if the market rotates back into those names? I mean, that's going to be a nice rally. Okay, so thanks again. Appreciate you guys. Have a good one.